Welcome to Property Investing with Abby. On today's episode, we have Jonny Dunn from DNA Financial Solutions with us. Johnny's been doing some of my mortgages to help me build my portfolio. So I thought it'd be great to get him on here for you guys so we can ask him and get rid of some common myths around property investing and getting mortgages in general. So hi,
Amazing.
Jonny.
Hello, good afternoon. Good, I love this. Like, I'm vibing off you already. Never have someone that's got the same level of energy that I do. But if we're talking about mortgages, which could be a typically dry subject, I'm glad that someone that's like on the same vibe actually can uplift it and make it a bit more interesting.
More exciting. Yeah. Mortgages, woohoo, we're here.
Well, it is. It's money. It's the biggest commitment that you'll ever have, isn't it? Really. So
it is.
Make it a bit more interesting.
It is. So that brings me on. How on earth did you end up being into mortgages, into finances, setting up DNA?
Okay, that's the interesting subject because you don't know anything about my background or anything like that before.
No.
I left school very early at 15, okay? So GCSEs for me, that was done. My blazer was off. I'm not interested in doing homework. I wasn't interested in learning anymore. I just wanted to go and work. And I became a builder.
No way! Jonny the Builder!
So yeah, Jonny the Builder, yeah. I started off building dry stone walls, living in the Yorkshire Dales, everything's out of stone, so ultimately I became a stonemason. And it got very cold outside, you know, a lot of work outside, lots of dust in your eyes, your hands were all mangled every day, and I was like thinking, actually, this is cold, this is damp. I fancied a change of career. I went to a grammar school, so I thought I was quite highly educated, even though I was the bottom of my class. I was like, you know, there's something more to me here. So I joined a bank. A local bank that was in the area, and I became a BDM, a representative for them, looking after mortgage brokers.
Wow.
So that was my transition actually to then ultimately becoming a mortgage broker and then owning a mortgage brokerage. That was my route. So it's good when you talk about property, the fact that property doesn't scare me perhaps as much as it scares other people. One, I say great, I understand if I create a mess of a property, I can correct it quite well. But I suppose from the financial side of things as well, I understand how to financially correct it and do the best path. So hopefully when I'm giving advice and my team are giving advice, we can speak almost wholeheartedly as investors, as property professionals, and as mortgage brokers. So there you go.
Wow, amazing. So the first myth, Jonny, that so many people tell me is, well, I'm in my 60s now, so I can't become a property investor because I can't get mortgages.
Yeah, I mean, in theory, the older you are, if you live in that property, the property will have restrictions based on your age if you live there. If you don't live in the property is actually what's categorised as now being unregulated. So unregulated means it's not really about you anymore, it's about the property. So if it's about the property, it's about, well, what can that property achieve? What's the rental income going to be? What's your tenancy like? Rather than, some lenders that also will lend to you personally for your own home may have restrictions if you were letting the property out. But most of the lenders actually operate that space as a buy-to-let, as a rental, don't have the criteria that's set to you. It's really just about what the property's going to generate. So you could be 80, some lenders you could be 90 years old and you can still get a mortgage.
And what we encourage our students to do is invest in limited companies, because limited companies do not have a life. There's no life on them. They live forever. So I could be 102 and get a mortgage in my limited company. The second myth we hear a lot, and this is to do with first-time buyers. So a lot of really young first-time buyers, you know, in early 20s, just think that they just can never get a mortgage, afford a mortgage, get a deposit. What do you see in the space around those?
Look, I mean, the interesting part is I think it's just down to an education point of view, that if first-time buyers are educated how to buy properties, it would certainly help them being put off what the headlines are showcasing, the fact it's harder for people, property prices are on the increase, interest rates are on the increase, rents are a little bit cheaper than mortgage payments. But actually, there is so many ways to get your deposit together. There's so many ways to increase your affordability. The fundamental part of being a lender, they want to lend money. How do they lend money? Okay, let's work with companies. Let's work with the armed forces. So for example, if you work for the armed forces can give you your deposit money. That's fantastic. You know, I mean, you've told me, I don't know if this is a secret, but you know, your business, Abby, gives the deposits to your members of your team. That's one area. There's a couple of lenders that I'm aware of that will allow a deposit to come from a loan that you've taken out of. So there's many ways of raising your funds. Yes, there was Help to Buy. Is that going to be coming back in some shape or form? I think it will. And then there's the affordability side of things. If you think of where me and yourself started out, probably lower incomes, you probably can't raise as much money as you would like to buy the house and live the lifestyle that you want to live. You either need to increase your own income, or can you have somebody that's almost going to act as a bit of a guarantor for you? A guarantor, or in the realms of lenders, they call it joint borrower sole proprietor. It means that you can have more than one person on the mortgage, but really only one person on the mortgage deeds. So you still benefit from being a first-time buyer, having no stamp duty, getting all the benefits and luxurious things that lenders want to give you as a first-time buyer, but still being able to increase your affordability to buy the house you want to buy.
So mum or dad can come on the mortgage basically.
Mum or dad.
If
you look at mum or dad, they're a top 10 lender. Grandma and granddad are becoming a top 10 lender as well. So it's becoming intergenerational in terms of how this finance is being passed down now.
The next thing we sort of are hearing more and more, and I don't know what you're seeing, is a lot of people are saying, and this is to do with their own mortgage, their own home again, is mortgage lenders are coming down quite heavily when they can see people have been betting a lot on like sites like Betfred and things.
What lenders are concerned about that you are living within your means. It's okay if you are, you go on Betfred or you go to the races now and again, or you bet on the lottery, and you're within your means. So let's say you earn a couple of £1,000s a month, okay? £100 is going on gambling here. That's okay. Okay, it's within your means. It's almost like a small portion of your income and your disposable income. But if you're seeing actually, even though that you may be getting £1,000 in and £1,000 out, hang on. That's becoming, well, obviously a bit of an addiction, but also they're becoming a bit of an issue from an affordability point of view. If your habit takes over you and the bets don't come in and things don't come off, are you going to be able to maintain a mortgage as well? And that's why lenders are a little bit, I suppose, put off the gambling side of it.
Yeah. The next thing is, when I talk to people about commercial mortgages and understanding the difference between a normal mortgage and a commercial mortgages, and a lot of people are under the impression that commercial mortgages are really hard to get. I know you've just done my latest commercial mortgage as well a few months ago, but can you tell us about commercial? Commercial
is about the product, so that the property, retail, it's office space, it's industrial. It can be larger scale residential properties. That is commercially viable because if you were to resell that property, you're reselling it as a commercial entity, okay? So, lenders, again, love that space because they're valuing it and they're assessing it based on a business, just like a business, okay? Rather than actually thinking about the tenants and us and me and you personally as investors, they're looking about the commercial product.
And I know with commercial as well, a lot of the time when I've done my big holiday lets or something, they are really interested in the income you're going to make. So it becomes not a bricks and mortar valuation, but more of a income valuation as well.
Exactly. I mean, they're always looking at worst case scenario.
Risk.
If we have to repossess the property, can we resell this as a commercial property? Does someone want to take on your lovely holiday? I mean, I've seen them. Your lovely, amazing holiday lets that everybody would want to to take over and buy. Someone would absolutely want to take that on because they can see you are running it as a business. They would take it on and run it as a business, so therefore that carries a better valuation. If you weren't running it as a business and you were sort of like a, well, let's say the average landlord actually that was just doing Airbnbs and the odd stays and they would stay in a bit here and there, it doesn't carry as much commercial value. But how you've branded yourself and how you've branded your business, that is a saleable entity and a lender will value it, of course, on that basis.
Thank you so much for being on here today, Jonny. We've absolutely loved speaking to you. Anybody wants to get in touch with Jonny or his team, click the link below and I'll see you next time on Property Investing with Abby.